Poonam, investors not loving it. Is it all about that capex number?
It is, but I think the capex number is fine. We were looking for $140 billion, $200 billion. Just continues to show that they're investing. And I think...
Wait, that's $60 billion more. That's a lot of money.
So, yes, but they need to invest, right? We know that Amazon has to continue to invest in cloud services. It needs to invest in AI. So there's a lot of catch-up that needs to be done here. I think the long-run narrative here is still good. The underlying results were solid across both AWS and retail.
Interesting. And so even though they talked about seeing first quarter net sales, 173.5 billion to 178.5 billion, street estimate is kind of in the middle of that 175.54. That's okay.
Yeah, that's okay. Like the results are good to okay. I think the numbers show that Amazon continues to plug away across its businesses, and it is making progress. And I mean, we're happy with those numbers. We think it's making the right investments. We think it's moving in the right direction, and we think it's growing profitably. The North America profit margins were better than expected, and AWS at 35% is still respectable.
Okay, so If we're not too concerned about the capex here, why are we seeing investors react like this, down as much as 10% in the after hours, down as much as 11% in the after hours?
I think we'll have to see what they say on the call on where this capex is exactly going, what the backlog looks like. I think the call will give us a little more insight onto where they are investing, and that'll be important. But I think, expecting higher capex than what we had thought yesterday, especially after Alphabet's result, was what we were kind of expecting.
So the reason Carol and I are like fighting to get to ask you this question, because maybe we're going to the same place.
Let's see.
So Andy Jassy in his press release, in his comments, actually has two sentences here, and one of them does mention the $200 billion in capex, but he says there are seminal opportunities like AI chips, robotics, and low Earth orbit satellites. Therefore, we expect to invest about $200 billion in capex across Amazon in 2026. Of those, AI chips, robotics, low Earth orbit satellites, where do investors want to see the investment? Would they rather see them in AI and chips than in low Earth orbit satellites? I mean, SpaceX kind of owns that.
I would agree with you there. I would like to see it more on their core business rather than ancillary businesses.
So one of the things that caught my attention, I'm thinking about, the jobs that they are already cutting, those corporate jobs. We got that late January. Poonam, Amazon saying guidance that they put out assumes no additional restructurings. What's your read on that? Is it, I'm just curious. Is it more job cuts, other shifts? What's our takeaway there?
I think you'll continue to see job cuts. I don't think we're over. They've highlighted it pretty clearly in their shareholder letter last year that AI is going to allow them to pare back on jobs, especially when it comes to some of those jobs that can be automated in the distribution centers and the logistics and in the technology workspace. So I don't think it's over. I think there's more to come, but I do think that they started and they're continuing to just push through what their original plans were for now.
In terms of operating margin, 11.7%, so that was bang in line with what the street was expecting. They're managing costs, they're getting ahead of things. That was a good thing to see that they kept that margin.
Yeah, it was actually really good. In fact, when I look at the margin composition and I look at the North America operating profit margin, which is largely retail, that was slightly ahead of expectations at 9%. So that was encouraging to see. Their international margins that were okay. And AWS, once again, that's really where you get the margin from. 35% was right in line with expectations. So I really think the quarter was in line to slightly better from an operating fundamental standpoint. I think capex obviously higher. We want to see where that investment is going, but hopefully they're making the investments and where they need to grow both the AWS and the retail business.
All right, just to recap, we've got shares of Amazon paring their decline a little bit. The stock has been down as much as 11% post-market, right now down about 7.5% here. Again, some of the headlines that we have highlighted on the Bloomberg, the company says 2026 capex about 200 billion. The street estimate was 146.11 billion. See's first quarter net sales, we've talked about this range, 173.5 billion to 178.5 billion. Street estimate is 175.54 billion. What else are you looking for? I mean, obviously more clarity in terms of what we'll get on the call, but there's, we were talking to Spencer Soper earlier, and he's like, there's just so much that comes out when you're dealing with Amazon. What other clarity are you looking for from this company? Or what other aspects?
Sure. I guess number one, we discussed the capex, where it's going. Number two, the backlog on AWS. I think that would be an interesting point to look at. And on the retail side, they're doing a lot, whether it's Rufus, whether it's Alexa Plus. I'd love to hear how they're integrating AI into the workflow for consumers to just make that conversion much easier. And then what they're doing with OpenAI, right? We don't know. There was news earlier about a $10 billion potential investment. What does that mean? Where is that going? What does it do for Amazon? What is the actual end result here from that investment?
What about advertising? The company calling out advertising growing 22%. Are we looking at that growth? Are we giving that enough credit?
I don't know if we're giving it enough credit, but what I would say is it's still, 20% plus growth is admirable for Amazon. We think that advertising is a segment that's sometimes overlooked as we get kind of caught up into AWS. I'd just say that for us, advertising is very important because it helps funnel the retail business. It's where you get the money to fund the retail business, and the growth that you're having its pursue, especially when it comes to physical stores, is grocery. It's high profit margin, higher than the cloud business. So clearly a very important vehicle for them as they move forward.
Where are the opportunities for advertising? I mean, I finally did it. I said yes, $3 a month because we want to watch The Night Manager without any ads. Those ads were really annoying me, and I did it. So I guess I'm part of the problem, or I guess for Amazon, part of the solution. But where's the growth?
But there's just so much more, right? If you think about the retail platform, there's a lot of advertisement done just on the e-commerce aspect of the business. When you have Alexa Plus, when you have Rufus, they're embedding advertisement in all sorts of ways. On the media side, yes, you're one of the few people that is opting out for those ads, but there are still millions of people who want it ad-free. And therefore, as they increase content, especially, and now they're increasing content using AI to help facilitate even faster content, there's just so much opportunity for advertising still.
Listen, I know this isn't your bailiwick, but I just think about Microsoft, Alphabet, like all of these hyperscalers, when it comes to the cloud and the AI spend. Is there a takeaway for you on all of this as you kind of watch these numbers that have come out over the last week or so? And Alphabet, of course, was just last night.
Yeah, I think the big question that I'm hearing everyone ask is, we continue to spend all this money, but what is the ROI on this capex? How do we kind of identify what the return is on the incremental investments that they're making, whether it's in chips, whether it's in other parts of the businesses? Help us understand how to kind of gauge that impact.